Hi there. Join me as I dive into the chaos of the stock market plummeting, and I'll try to figure out what this means for Trump and the economy. The S&P 500 is now more than 10% below its last record high, a significant marker for investors worried about an escalating sell-off. On Thursday, the world's most widely followed stock market benchmark slid into a correction, signaling that the 2-year-long bull market is losing momentum in the early days of the Trump administration. The decline stems from growing investor pessimism over Washington's unpredictable policy shifts in recent weeks. The back and forth on tariffs and mass layoffs of federal workers have fueled uncertainty on Wall Street. The S&P 500 fell 1.4% on Thursday, pushing it down 10.1% from its peak less than a month ago. This places it in a correction, a term used on Wall Street when an index declines by 10% or more from its peak, a level that often raises concerns among investors. Other major indexes, including the Russell 2000 and the tech-heavy NASDAQ composite, had already entered correction territory. On Thursday, the NASDAQ fell by 2%, while the Russell 2000, which tracks smaller companies more vulnerable to economic fluctuations, dropped 1.6%. Investors' bigger concern is that uncertainty around Trump's policies is discouraging consumer spending and business investments. If this trend continues, it could push the economy into a downturn, forcing a reassessment of corporate valuations. I think what markets are telling us is that they are very concerned about the potential for a recession, said Christina Hooper, Chief Global Market Strategist at Invesco. That is certainly not what markets expected going into 2025. This marks the 11th correction in the S&P 500 since the 2008-09 financial crisis, according to data from Yardeni Research. Of those corrections, 3 developed into bear markets, defined as a steeper decline of at least 20%. Despite the market turmoil, the Trump administration has downplayed concerns. Treasury Secretary Scott Bessent said on Thursday that he was focused on the real economy, dismissing Wall Street's reaction. "I'm not concerned about a little bit of volatility over 3 weeks," he said. As stocks tumble, the administration continues to emphasize that its economic policies aim to foster long-term job growth, even if they trigger short-term market instability. However, some experts argue that the economy is already feeling the strain. "The economy has already begun to be negatively impacted," said Seema Shah, Chief Global Strategist at Principal Asset Management. The tech sector, which led the market's gains in previous years, has been hit particularly hard. The NASDAQ composite has plummeted roughly 14% from its December peak, reversing much of its previous gains. The sell-off has extended beyond tech stocks, signaling broader economic concerns rather than just a reassessment of overvalued tech companies. The Russell 2000 index has fallen 18% since November, nearing bear market status. Other sectors affected by tariffs, such as food producers, have suffered sharp declines. The impact has also spread to industries reliant on consumer spending, including retail and airlines, as fears of an economic slowdown grow. On Thursday, Dollar General reported a decline in customer traffic and warned of continued financial strain. Delta Airlines also slashed its financial forecast for the first quarter, citing weaker demand for domestic travel. So far in 2025, the U.S. economy has only faced headwinds, Shah noted. On Thursday, Trump escalated trade tensions by threatening a 200% tariff on European wine and champagne. This followed the European Union's announcement of retaliatory tariffs on U.S. whiskey and other American products. The administration has already imposed tariffs on steel, aluminum, and a wide range of Chinese goods. Trump also ruled out an exemption for Canada, one of the United States' largest trading partners. "I'm sorry, we have to do this," he told reporters. The administration's shifting trade policies have left investors on edge, making it difficult for the markets to find stability. Even positive economic data has failed to reassure investors. On Thursday, weekly unemployment claims came in lower than expected, and a better-than-anticipated consumer price index report briefly lifted stocks on Wednesday. However, broader concerns over tariffs and policy instability quickly overshadowed these gains. Investors worry that once tariffs take full effect, they will drive up prices, hurting both businesses and consumers. Additional uncertainty stems from Trump's immigration policies and the layoffs of federal employees under the so-called Department of Government Efficiency, DOGE. The looming possibility of a government shutdown is also fueling anxiety. The outlook for inflation depends more on tariffs, deportations, and DOGE than the backward-looking data releases right now, said Bill Adams, chief economist for Comerica Bank, on Thursday. With market volatility showing no signs of easing, investors remain wary. The coming weeks will be crucial in determining whether the correction stabilizes or deepens into a full-fledged bear market. Stay tuned for more updates as we track the latest